Hello, this is the Tradesight US Stocks and Futures Market Preview and Forex Market Preview for the week beginning Sunday, the 21st of February 2021, ending Friday the 26th. This is the last week of February already. Unbelievable. Statements print after Friday, as next Saturday and Sunday are the 27th and 28th, and it's a short month, as we know. So March is a wide open month. There's no real holidays. Easter isn't until April this year, so it's just going to be a good trading month. Usually March is excellent, but then again, usually is January and February, and I would say it's been selective at best right now. So we'll see what we get. Start out with the dollar index. Here's the daily chart. Still sitting where it was 2.5 months ago. Forex is kind of dead and boring at the moment. Go through the major daily charts. Euro dollar, the inverse of the dollar index. Pound dollar. We made a little money here this week. It did move upwards. Aussie dollar breaking through that 13 risk line, 13 sell signal risk line, which is interesting, and breaking out to new highs on the Aussie dollar. Euro yen also hanging out near the highs. Pound yen also hanging out near the highs, made new highs. Pound Swiss also made a good move. So the pound stuff's been moving, obviously. When we go to 30-minute candles and take a look at the week, what we see, like for example, on the euro dollar, high to low for the week is only about 130, 140 pips. Not very exciting. The big move was Tuesday and Wednesday. Pound dollar, high to low for the week. A little bit better, 200 and... actually, it's not that much better. 180 pips, let's call it 190, maybe 200 pips. Really unfortunate because Thursday was the big move. Friday was a decent move, but the rest of the week was fairly tame and boring. So we won't get into all of that. ES front month futures contract. This is the daily chart of the broad stock market in futures form. Look at that. I mean, look at the last 5 days, right? It's dead flat. You'll see it even worse in the intraday in a minute. But let's go through the major daily charts. Crude oil down to $1.51 on Friday to $59.01. Gold up $8.10. S&P cash lost 7.26. The NASDAQ 100 was down 56.73. SOX up 76 points. That is, let's see, 13 sell signal on the SOX right there. When you put a projection note, so Friday's was a 13 sell on the SOX. We're still, let's see, let's go back to the S&P real quick. That 13 risk line broke. NASDAQ 100, that one broke as well. Biotech's up 53, not near a 13 sell signal, not near highs. Russell 2000 up 48 points. The VIX loses 44 cents to 22.05. The trend closes at 0.96, puts the 10-day moving average at 1.0. NASDAQ volume, 6.7 billion shares. Thursday and Friday were a little lighter than we've been seeing, and that's interesting because Friday was options expiration. So it should have had heavier volume, and really that means that there's just wasn't a lot of action on Friday, which is what we expect. That is module 10 from the stock course. Advanced decline ratio on the NASDAQ plus 1477. So more stocks were up than down on Friday. On the New York was plus 1070 or so. Evidently it doesn't want to load. Give it a second. Yeah, 1070. Google loses 17 points. That's a blip. It had made new highs this week. Apple up 16 cents, not at new highs. Netflix down 8 points, not at new highs. That thing's been flat for 6 months now. Amazon down 78.33, which is just a blip really, and been the same. It was here back at the end of, or back in 4th of July last year. So it's really been flat. Tesla down $6.08. Facebook down $7.83. Again, this was here last August. Zoom down 65 cents. That's kind of tame for Zoom, sitting where it was back at the end of August, beginning of September. Goldman Sachs made new highs, new closing highs on Goldman Sachs. TLT, the 20-year bond ETF, was down $1.93. So the bonds are continuing to head lower as you start to have to worry about inflation and rates. The Dow up 98 cents. Literally up less than a point on the Dow for the day. Bitcoin, is still trading over the weekend here, 55,900 at the moment, and the put call ratio closed at 0.563. All right, if we take a look at the intraday action, let's go to 10-minute candles. So Monday was a holiday, remember. So there's Friday's close on the far left. Monday's the joke, the flat. They shouldn't even open it. It ruins the chart. Tuesday, so we have a small gap up from Friday to Tuesday. We filled that gap and closed about even from where we closed on Friday. Then Wednesday, a small gap down, came back up, basically filled the gap. So at this point, we're into Wednesday and we still haven't done anything for the week. Thursday was our better trading day. Gap down, went lower, came back up. Friday, small gap up, filled that, and net for the week, we closed down a few points on the S&P, so it really wasn't a big deal. When you look at the NASDAQ side, it's kind of the same story. So it was not, I would not call it a super interesting week by any stretch of the imagination, but we did have certainly one solid day and maybe one mediocre day beyond that. All right, in terms of economic data coming out in the week ahead, Sunday, SPPI out of Japan. Monday, German IFO business climate, Belgian NBBB business climate, CB leading index here in the U.S. at 10 a.m. Eastern Time, retail sales out of New Zealand at 4:45 p.m. Eastern Time Monday night, bank holiday for Japan on Tuesday, goods trade balance out of Australia, claimant count change the unemployment rate out of the UK at 2 a.m. Eastern Time Tuesday, PPI out of Switzerland, final CPI out of Europe, CBI realized sales out of the UK along with their 30-year bond auction. U.S. has their housing price index consumer at 9 a.m., consumer confidence at 10, and Richmond manufacturing index at 10 on Tuesday. And then that night, construction work done out of Australia along with their wage price increase and then a rate announcement out of the Bank of New Zealand that night. All right, then that takes us into, we're already into Wednesday at this point, so it's a quick moving week with not a lot of data. Bank of Japan core CPI, German final GDP, Credit Suisse economic expectations, German 10-year bond auction, corporate profits out of Canada, CB leading index out of China, new home sales out of the U.S. at 10 a.m. Eastern Time on Wednesday, along with the crude oil inventories number, that's the weekly number, private capital expenditure out of Australia that night, German GfK consumer climate, M3 money supply and private loans out of Europe, 10-year bond auction out of Italy, preliminary GDP out of the U.S. at 8:30 a.m. on Thursday. So that's the second look at GDP from the fourth quarter. We already got the advanced look back in January, so this is not as big of a deal. Durable goods, preliminary GDP price index, initial and continuing jobless claims numbers. It's all at 8:30 a.m. 10 a.m. pending home sales, 10:30 natty gas. Thursday night, we got trade balance out of New Zealand, Tokyo's core CPI, and preliminary industrial production and retail sales out of Japan, private sector credit out of Australia, and now we're already into Friday. Housing starts out of Japan, GDP, gross domestic product out of Switzerland, German import prices, French consumer spending, French preliminary CPI, got Spanish flash CPI numbers, CAD, IPPI, and RMPI. Here in the U.S. on Friday at 8:30, we've got core PC, price index, goods trade balance, personal income and spending, preliminary wholesale inventories, Chicago PMI at 9:45, revised University of Michigan sentiment at 10, and that is it. So I would say it's a heavy week. None of our big three, no Fed meeting here. The GDP number is second look, so it doesn't matter. So we don't have to get crazy about any of this. I wouldn't say it's super interesting. We will just trade the week, and hopefully we'll get some better action than what we saw last week. Charts, as usual, brought to you by eSignal. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple of weeks. Have a great trading full week, and enjoy your end of February.